This is Market Day Report. All right, markets are open and trading this morning. We've got a full week of uninterrupted trading. At least that's the way it looks right now. But no holidays, no closing early any day. So a full 5-day trading session. How do we start? With the corn market. Let's go to the board, and we're 3.5 higher on the front month March at $4.74 a bushel. December, $5.52 that's up 2 pennies. And maybe some of that strength based upon USDA reports on Friday. Soybeans, 10.21 3/4 on the January, that's up 8.25. And the March contract at 10.28. Make that 10.29 1/4, and that's up 4 cents. Flash sale to China for U.S. soybeans, 198,000 metric tons reported last night. Soy meal contracts were higher in the overnight and higher again this morning as we open, with soy oil reversing that trend and moving into the red. Let's go to the wheat market now. In Chicago, July at 5.60 1/4. It's up 5 3/4 cents. Hard red on July at 5.74 1/4. That's a nickel higher. As wheat seeded area, hard red winter wheat seeded area expected to total 24 million acres. That's up 1% from last year. Spring wheat, Minneapolis, that March contract at 5.85 1/2. It's a penny and 1/4 higher. All right, Tommy Grisafi's with Nesvick Trading. Tommy, welcome back, and what are you watching?
Yeah, Tony, I'm just proud that I have this stuffed up behind me, the Ag Bull podcast and Ag Bull Media. You know, people were laughing at me just 2 months ago. They said they're going to change your name to Ag Bear, and I'm bullish agriculture. Now, sometimes the price goes down, and that's what we do, helping people hedge and protect with that. But what a shocker out of the USDA. I've been doing this a long time, and I about spun my head off looking. I go, did they just lower the yield 4 bushels? And this is why all these conspiracy theories start with that people don't trust the system, right? So when brokers and analysts and all of us base our math, it's math, right? That we this is how much grain's out there. We instantly, within a tenth of a second, everyone needs to change their numbers. They're using a different set math. And it's a bullish thing for the American farmer. We got prices improving, spreads improving. We are going to see some basis weakness because the futures shot up so high. So if there's anything, if you said, Tommy, what do your clients complain about? Oh, yeah, the Board of Trade goes up 15 cents, but then the basis comes down a dime. That's how the game's played, folks. It's wonderful knowing how to trade cash grain. Use this rally as an opportunity. Now, before we go on commercial break, for as excited as you are, December 25 and Nov 25 are not at that higher prices. So I'm super grateful for the money the government's given away. You know, people have it a lot worse. I was listening to you about the California fires, and there's some real trouble out there. So be grateful. Market rally, government money. Let's take a commercial break, and we'll talk cattle.
Yeah, and also, you mentioned that December 25 contract. I want to bring this up real quick before we go. Just looking at the chart on the 6-month for corn, and it gives us a pretty good idea of where we are. We're still well off of the highs that we saw about 5.5 months ago, and then back in October, and then November, which is the new crop for beans. Look at that. We're trying to work our way back up around that 1050 level. And since we're throwing in some new crop, I'll throw in the hard red, which is the July contract. And you can tell the bottom's pretty much fallen out of that market. Let's take a break. We'll come back in a moment. We'll talk livestock futures with Tommy G. Market Day Report continues after this. When we look at how this market has performed for the last 12 months, a 15.9% gain. Live cattle futures. Let's go to the board now with February at 198.55. It's down 22. One thing we want to keep an eye on that February contract is 199.57. February contract high, which was set back in September of 2023. So will we challenge that 199.57 level today? We've seen 199.50 as far as the high today on the April contract in early trade. But again, contracts are lower. Feeder cattle market is moving higher with January at 273.42. That's $1.07 higher, and a 47-cent gain on the March at 269.80. Over to the hogs now. Hogs have gained 14.8% over the past 12 months. February up 52 at 83.07, 89.07 on the April. That's up 40. One more, Class 3 milk futures. USDA saying that they expect higher prices coming due to, well, higher butter and price forecast for cheese. So Class 3 milk futures a little off of the highs today, 20.12 on the January. February a little more active at 20.03. It's down 24. Okay, let's bring back in Tommy Grisafi, Nesvick Trading. Tommy, in the proteins, what catches your eye?
We just took 2 big chuck roasts out of the freezer here that I bought from my good friend Kelly up in South Dakota. So thanks, Kelly, for producing great beef. It's getting more expensive to buy beef from clients, and I don't know how much the consumer can take. In the stock market, without mentioning specific names, she said, oh, this market's up 14% or that. There's a major stock out there right now today that's down 20% a day. So when a multi-billion-dollar company could lose 20% a day, it would be normal to think that cattle could have a 10% pullback would be totally normal. So look at those prices, take off 10% from that, and that would probably mess people up. Our good friend Chris Swift, right there out of Swift Commodities in Nashville, he's taught me so much. And the one thing Chris is telling his clients and telling me as a friend, the cattleman is working with so many dollars. The cost to produce a pound of beef has never been more expensive. As you see these grain prices increase, corn, meal, and everything else, we know labor's not coming down, and we know insurance is going to go through the roof. Not only because these California wildfires, it was happening before that. So have your A game out, manage the risk. I'm happy for the cattlemen. As far as hogs, well, that cycle is a different cycle when it comes to producing a pork. We could be short on pork and then within 6 months have that caught up. So a different set of mathematics, but good to see the markets up nonetheless, my friend.
Tommy Grisafi's with Nesvick Trading. Thanks, Tommy. We'll see you again soon.